Hey guys, welcome to this week's stock market recap. I'm Robert Montes with Nexus Wealth Management. Today we're going to be going over what helped the market, what hurt the market, and your key takeaways for the week of August 8th through August 15th, 2025. So first off, your recap. Every major index here in the United States was up. This is great news. We saw the S&P 500 up 0.9%, the Nasdaq up 0.8%, and the Dow finish up 1.7%. Now, what led to this was inflationary data. Numbers came in and they were all pretty good. We'll talk about some that weren't just a bit, but for the most part, inflationary data came in at or below anticipated levels from analysts. This factored into people's hopes that the Fed will indeed be cutting rates next month, which was factors in the prices that we saw. So fingers crossed that that's the direction we go. We also saw very strong Q2 earnings reports. So we've been talking about this for the past few weeks. More data has come in. Earnings this past quarter were very strong. This past week, we saw specifically sectors such as communications and healthcare up. So that was really good. And then internationally, we don't talk about that all the time, but international equities were up very well. I think the MSCI AFA was up 2% this past week, which had to do with no new trade tensions, which is good news, but also the exchange rate between the United States and other nations being favorable to them with a weakening US dollar. So that is, definitely helped international equities. Now, what hurt the market? While inflationary data was pretty good, there were some things that we need to pay attention to, such as wholesale prices. Wholesale prices saw their steepest gain in the past 3 years, I believe it was. So while we are hopeful that the Fed will be cutting rates here, it's not guaranteed because there are some things that we still need to be paying attention to that are counteracting their goals for doing so. The other thing we saw is that while inflation has been going down, it's been doing so slowly. So again, something that's going to be factored into the Fed's decision to cut rates or not. And the third thing is just tariffs. Like I said, no new things or new tariffs or anything like that, but just companies are getting used to what the impact has been on those new tariffs. As far as key takeaways, I would say pay attention to your international equities. If you don't have international exposure, it might be time to look at that. Of course, talk with your advisor, make sure that fits for you, and maintain a long-term perspective. I believe the S&P over the past 20 years is up something like 431% cumulative. So if you take a long-term perspective, these things tend to work out. Of course, consult with your advisor to make sure that's the case for you. But if we could be a resource anyway, let us know, guys. If I missed something, let me know. If not, hit that like button. It does help, and leave a comment. Otherwise, catch you next week. Thank you guys for watching. See you then. Take care.